Good morning, treasurers. This is your host, Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. In the international market, the 10-year US Treasury yields retreated on Friday after surging above 1.6% in the previous trading session. US 10-year closed 10 basis points lower at 1.44 percentage points, and 30-year closed 16 basis points lower at 2.17 percentage points on Friday, the last trading session of February 2021. Remember, when there was a heavy selling by all the participants, we at Night Research were very sure that at 150 level, a huge foreign sovereign buying can come in the US Treasury, which indeed came on Friday, and the benchmark was closed at 1.44 percentage points. Please note that this buying can stop the yields for some time, but once it crosses the 150 levels decisively once again, 175 will be the next target. Even in Australia, on 1st of February 2021, 1 month ago, the Australian 10-year bond was trading at 1.06 percentage points, and on last Thursday, it saw a high of 1.76 percentage points, which was a 70 basis points increase in a single month. The Reserve Bank of Australia then carried out 3 billion Australian dollar of unscheduled bond purchases last week in an effort to calm the markets. Australian 10-year closed at 165 on last Friday from 1.06 on 1st of February 2021, 59 basis points higher in a single month. German 10-year closed at minus 0.26, 4 basis points down from Thursday's minus 0.22 percentage points. As far as Chinese bonds are concerned, Chinese 10-year bonds are back to 1st October 2019 levels. I repeat, it is back to 1st October 2019 levels, way before the pre-COVID scenario. Rather, on 1st of April 2020, at the peak of COVID-19, Chinese 10-year had seen a multi-year low yields of 2.5% and is now trading at 3.28%, almost 78 basis points higher than the lows seen during the COVID-19. In short, yields across the globe are on rise on a reflation trade, and India will be no exception here. In the crude oil market, crude is trading at $65.63 per barrel. Short-term range for crude seems to be 65 to 68. Please note that there is an OPEC Plus meeting on March 3rd and 4th, and we at Night Research expect further easing of the oil production cut, thereby increasing the supply and limiting the crude price increase for now. In the currency market, dollar index or DXY is at 90.78. DXY's today's range seems to be 89.95 to 90.95. The next target for DXY are 91.05 and 91.60. USD CNY or Chinese Yuan is at 647. USD INR with a high of 73.55 closed at 73.10 on Friday. USD INR's range for today seems to be 73.80 to 74.10. The surge in the US yields DXY retreating from 90 levels and FII outflows are the main reasons for USD INR surge. Please note that on Friday itself, FIIs in the Indian equity market sold stocks worth rupees 8,295 crores, the largest sell-off in last 6 months in a single day. As far as domestic markets are concerned, as per the RBI report detailing the results of an internal review of MPC framework, it has been suggested to retain the current target and range for CPI inflation for next 5 years as well. Current CPI target is 4% and the range is plus minus 2%, giving a broader inflation corridor of 2% to 6%. Now let's do the 26th February 2021's GSEC auction analysis. There were no 515 GS 2025 and 585 GS 2030 auctions. 622 GS 2035, which had an uniform pricing for this auction, saw the cutoff came at 682 or 94.60. This cutoff was at least 10 paisa lower than the market expectations. Also, 622 GS 2035 saw a devolvement of rupees 2,131 crore from 11,000 crore auction. The underwriting fees for PDs, primary dealers, to underwrite 622 GS 2035 auction was 64 paisa, 15 paisa higher than the market expectations. 515 GS 2025 closed at 577 versus 571 the previous trading day. 585 GS 2030 closed at 623 versus 618 the previous trading day. Please note that 585 GS 2030 is at a critical support level of 623 and it is to be seen whether 623 is breached. We at Knight Research believe 623 level would provide necessary support and yields won't rise much from here on. The broader range for 585 GS 2030 today is 618 to 623. 623 is a strong support. Recommendation: 515 GS 2030, 515 GS 2025 at 577 looks attractive for 10 basis points gain. 585 GS 2030 at 623 looks attractive for 5 basis points gain. Please note that this purchase recommendations are only for the trading purposes, followed by strict stop losses, as yield rise is certain in the future. We at Knight Research are expecting another 40 basis points increase in yields by March 2022. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Knight Fintech. See you tomorrow with the new episode of Night Snippets.